Wow, so the big news of today has been the breakout in Amazon. It has been a stock that we've been following very, very closely. We've had 3 triggers placed on this over the past couple of weeks. It really started with this bullish continuation pattern just here. We had our first trigger above the highs of this candlestick. This is dating back to the 30th of October 2017. This was getting priced in at 1,125. Second entry was over here at 1,140. And again, we were talking about the stair-step continuation and just waiting for those exponential moving averages once again to catch back up and to begin interacting with price action. Now, as you can see on Monday and also Tuesday, you can see we came back down and we started to touch that 10 exponential moving average. The third trigger, 1,145, has been taken out during Wednesday's trading session. Here we are, we're trading just shy of 1,160. So again, we're seeing some very nice continuation signals with Amazon. This has been a process, or at least a short-term consolidation underway for Amazon for a number of weeks now, but it looks as though finally we are seeing the legitimate breakouts. This is very exciting. If you are positioned in Amazon, even if it is at 1,145, you made some pretty decent profit. For the time being, you are up $15, but if you start looking back on the previous 2 entries, one at 1,140 and the third at 1,125, this is starting to look really, really good on those option positions. Now, as I say this, the markets themselves have been, I guess they've been holding up close to those highs that we printed yesterday. The S&P 500 is pulling back. We are down half a point or so. It is rather negligible at this particular point. The Dow Jones has copped the biggest of retracements, or at least the pullback. We are only down, however, less than 50 points. So this is some short term. Probably what's going to happen is that we're actually going to close the gap, the difference between Monday and Tuesday's session. If I can zoom in on the actual chart for yourself, you can see we're probably pulling down to about 23,450, and then we should see the continuation to the upside. So again, my diamond trade itself, it's still holding firm at 23,639. I'm a little surprised that we didn't see an up week in today's day's worth of trade. But what we have produced is even better, is out of a bearish candlestick. It isn't a reversal candlestick, but why I like this so much is that we're simply building that resistance area, that very short-term resistance area between the peak of yesterday and, of course, where we've traded today. I love these types of setups. This isn't a reversal pattern in and of itself. We should see this gap close. That would be the ideal sort of scenario. And then we'll see the buyers jump back in and begin to push the Dow Jones Industrial Average above the trigger high on my screen over here at 23,639, just to reiterate. Now, again, on the NASDAQ, we are pushing up. We are up marginally, up 10 points. This is largely helped, of course, by that move in Amazon. But again, you should just expect this to continue indefinitely. We have no major reversal signals whatsoever. We are seeing the continuation of gaps. The gaps themselves are a little bit suspect at this particular point. I mean, over the past 1 month, we've seen 3 true gaps, and you can see they've all been to the upside. I'm just highlighting them on my screen for you. It's very rare to actually see this, especially up and around all-time highs. So I am paying attention to these gaps. Again, at this particular point, they are looking like continuation gaps, but I will update you if they do cause us to believe anytime soon if they are going to turn into exhaustion gaps. But at this particular point, there's no reason for concern. Now, if I take this discussion into the US dollar, the US dollar today has been clobbered. We are down 72 cents on the dollar index, but I just wanted to reiterate also that you have to remain bullish on the US dollar as long as we remain above these 2 candle wicks over here. So we're still looking as though we are pricing in that inverse head and shoulders. We may be overshooting the retest of the neckline. This can happen, of course, from time to time, but what we are essentially seeing is a series of, or at least the beginning of, a series of new higher lows, which is essentially the trend reversal. And if we bring up, let me just bring up the right template for you, you can see that we are again developing negative divergence, or positive divergence, I should say, bullish divergence all the way down to the lows, into the year low to date, so to speak, in September 2017. So I like this pattern. I like it a lot. My first trigger to get into this was if we closed above 94.17 or even flinched above it. We pretty much tagged it yesterday. The high was 94.17. No trades triggered on this. So again, what we may be sort of gifted at this particular point is to actually bring this entry down in about a week or so. We'll have to obviously move with some of the little short-term ranges that price into the US dollar, but at this particular point, consider this an opportunity to leg into the US dollar over the coming days, if not weeks, still directed to the upside as long as we do not definitively take out this little swing low over here. If we come down and we sort of produce or set up that of potentially a hammer at support, something like that, that will be the signal where we can bring this 94.17 trigger down to potentially even as low as 93, and then we might have a 1 entry, a 2 entry being at 94.17, and then the third entry to pyramid into the US dollar up here at 95.22. So we'll keep an eye on this also. If I extend this conversation into that of gold and silver, obviously if we see a sell-off in the US dollar, we are going to see a jump or a gap and some bullish action, or at least price action, come into that of gold and silver. We are seeing that today. However, it is relatively negligible. Again, we're up $1.37. This isn't the biggest of moves, and although it is short-term promising, we're still nowhere near even taking out this little sort of swing term, or at least short-term swing high that we priced in about mid-October 2017. What we are doing, however, is that we are pushing back up into the top of this Bollinger Band. So what appeared to be that of a false Bollinger Band breakout on Friday last week is stabilizing. We are coming back up. Pretty much we're definitively right now trading back out where we closed on Friday. So it's going to be interesting to see just how far gold can move. And again, this is all determined as to how low the US dollar is going to drop over the coming days. Now, if I extend this conversation into silver also, you can see if I can zoom in on the detail and just get rid of my pen drawing tool, that again we're seeing a little pop to the upside. But again, if you compare this to where we have been entirely for the month of November, we're pretty much still in a sideways moving range. So we aren't seeing a major definitive breakout in that of silver, nor are we really seeing it sort of show up in terms of volume either. If I zoom out and show you this, I mean, pay attention to volume. Volume isn't really doing all that much. If anything, the red volume spike that we saw 3 days ago on the back of this white candlestick is really indicating that we saw on Tuesday, Monday, is somewhat showing that this might be that of a false little bounce to the upside. And that's what I'm sort of thinking about at this particular point. I've got my entries here, not on silver, but more so gold. 1582 is the short I'm looking at on silver. If we do start to crack below it, it doesn't have to happen, but I am quite convinced in this trigger if we do move below it, but more so for the GLD ETF, 119.99. And this, of course, is on the back of, once again, what is going on with the US dollar. The chart pattern is more important than what's happening over the past 2 days worth of trade. And again, I just want to firm up and say this is probably going to give us an opportunity to lower our entry if it chooses to reverse somewhere above or higher than this little short-term higher low that we priced in during the month of October. Now, if I quickly go through some of our stocks in our top 12 list, Apple is running back up close to its all-time high, so this is relatively exciting as well. It hasn't seen the breakout like we've seen on Amazon, but I do think it's coming. Boeing Airlines, again, very similar to the Dow Jones Industrial Average. I like these types of candlesticks. I'm not concerned about it, and the reason I like them is because we don't have upper wicks. Yes, the net movement today has been down, but what it is essentially doing is that it's giving us more resistance that once we overcome, it should help us, or at least the probability of the trade breaking out and continuing goes up exponentially. So I love these types of short-term resting types of candles, and again, I welcome them. I really do at this particular point. So Boeing Airlines is continuing to build. No reason to be short this stock, looking to short it at this particular point. Baidu, again, beginning to present, or at least construct out of a shooting star. So this is under development at the moment. Caterpillar is really moving nowhere, really, in particular. I mean, we're still quite a distance away from our continuation entry, even in the back of a relatively positive week so far. Caterpillar hasn't really done all that much. It's still looking as though it needs more time for consolidation, but the longer we give it, the sooner the actual breakout is going to come. COP is bouncing off from the 50 area like we've thought. Hold on to this, or at least keep these open for a little bit longer. This, once it gathers traction around the support area, will take us back up to 54, but really my target is just shy of $60 in this particular stock. Just shy of $58. It's coming in at $57.44. That's really where I expect that next swing high to begin slowing down once we get there. CVX, again, pricing in another shooting star, very similar to that of the previous stock we just spoke about. Again, it's retesting the open red box, so think about this over the coming days. It's not a trade to be necessarily jumping into. Google is pushing back on up into our resistance area. This is going to be exciting because Google generally follows Amazon, and Amazon generally follows Google. So when we see the market leaders begin to lead, generally it's the precursor as to what the rest are going to do. So that's why I'm so excited about not only Amazon, which broke out today, but also Google in the future, Apple in the future, and also Netflix as well. Netflix I just skipped or jumped to, but you can see we haven't really moved all that far during today's worth of trade. If I bring up those exponential moving averages, they are starting to move sideways, especially the 10 and the 20, but the 50 is still sloping quite nicely as well. So I like this trade, although it isn't moving yet. IBM is still trying to flinch above 152. This is going to take a little bit of time, but that will generally drift higher. That's something that I'm excited about moving forward. Tesla, as well as coming back into this red box. We haven't seen the definitive back test yet. That's going to come over the coming days. And also to conclude with right now, if I can bring up the right stock, this is Facebook to conclude with. You can see how we're coming back up and getting very close to the breakout trigger. Again, very reminiscent of a lot of individual tech companies continuing to push on up and take out those swing highs. This is something which is continuing to form, continuing to build, and something that you should have on your radar also it's outside of our top 12 list, but I've been speaking about it for a little bit now, a couple of weeks at least. So I wanted to just to recap the markets as at Wednesday. There is still about 30 minutes worth of trade. I'll come back with you with another video of something severe happens in the last 30 minutes of trade. If not, enjoy your Wednesday evening. I'll be back with you later in the week for some more market updates. All the best, everyone. Farewell.